Hey guys, we'll get to the webinar in just a moment. Just going to make sure everyone's in before we get started. Okay, everyone, good morning. Welcome to today's webinar on the power of cash flow reporting. My name is Jamal and I'm a pre-sales consultant here at Meditech UK. If you've got any questions today, please feel free to ask them in the Q&A box at the bottom of the screen, and I'll review and answer these at the end of the webinar. So what we're going to be looking at today. Today we'll be looking at the standard functionality in Priority that allows you to see your current cash flow and your forecast. This functionality is provided out of the box, and all you need to do is spend a little time, set it up, and then you'll start to see the benefits. To set up the system, you need to define various groups and codes that are assigned to customers, suppliers, and transactions. These make up the foundations of the setup. So let's talk about these a little more. When we look at our cash flow, we need to group the various elements together to review reports in more or less detail. In my examples today, we are grouping income and expenses as shown here in the cash flow group, regular income, infrequent income, purchases, and overheads. This means when I run cash flow reports or forecasts, I can see the summary of information at this level. If I need more details, this is where the cash flow category comes in and allows me to break that summary into different subsections. These do not need to align with my P&L. They might, but they don't need to. The cash flow is made up of two reports. The cash flow report or cash flow statement shows the current liquidity of your business at a given moment in time up to the present date. The other is the cash flow forecast. So the other is the cash flow forecast, which gives you an idea of your potential cash flow over the forthcoming month. This will allow your business to plan to avoid any shortfalls and to move cash to savings during periods of high liquidity. So let me show you how this is created in Priority. So you define the group in cash flow groups, which is located in the reporting setup section of the system. So we're going to go to financials, maintenance of financials, basic data, report setup, cash flow group. Here you can set up those high levels of grouping for the cash flow report. If I bring back the data I've already got, you'll start to see a few examples here. Now, one that I haven't got in here at the moment is purchases, so I'm going to add that now. You also have the option of whether it's a receipt or a payment. Now, purchases are a payment. So I'm doing that, and I'm going to flag the payment tick box. Says it's money leaving the business. Now we can go to the cash flow categories form to create categories and then link a group to a category. So if we go into the same menu and just above the cash flow group, we have the cash flow categories just here. On entering the form, we can see some of the examples we just spoke about, as well as some others, such as bank charges and depreciation. You'll know whether a category has been defined manually or whether it existed in the system the whole time by looking at the tick box on the right-hand side called predefined. So if it's ticked, it comes sort of out of the box with the system, and if it's not, it's one that I've added, and we can see a few more there as well. Now, what I need to do now is assign the cash flow group I've just created to the cash flow category. So we're going to go over to here. We're going to find our purchases one, and we're adding it against the line purchase invoice. Now, when I come off the line, it's going to tell me that I'm revising a predefined cash flow code because it's ticked. So I can just hit OK on that. So those predefined codes are used as a default by the system when we later run the automated cash flow routine. So now we've set up our categories and groups, we need to make sure the system assigns them as we wish. These codes can be assigned as default in two ways. So the first is to attach them to customers or suppliers that we have default categories assigned to transactions in or out of our bank involving those customers or suppliers. So for example, I can go into the nominal ledger, chart of accounts receivable. I can bring back all my data, and you'll be able to see here that our top line, the Harry Potter account, doesn't have the cash flow code that all of the other customers have. Now, we could even group these lower. I've just got them as cash in for my customers, but you could have separate cash flow codes for perhaps EU suppliers, rest of world customers, EU customers, or even business to business or B2C would be another way of breaking that down. So the same method is true for a supplier, but you'll use the chart of accounts payable form. Alternatively, we can assign them to the transaction type itself. For example, check or bank transfer, receipt, or over-the-counter invoice. Now, this is done in the journal entry code form. So if we go to financials, maintenance of financials, basic data, journal entry code, I should have this set up so we are on the bank transfer already. So if we come down to the bottom line and find the cash line, which is this one, we know that because it's from the cashier, /bank, /credit card account, and we go across to the cash flow code. This we know is cash going out of our business, so we can set it up as cash out. Okay, so now that we've done some setup, we can run the cash flow statement as it currently is. Let's have a look at the inputs that we need. So first, we're going to go back to the nominal ledger. We're going to go to financial statements, cash flow, and then cash flow reporters at the top. So once we run that, on our second screen, we get a few options of how you want your cash flow statement to appear. So you have the 4 options for time periods, which are yearly, quarterly, monthly, and weekly. And with that comes a 5th option called detailed, where you'll see the exact transactions and not just the headers. For this first example, let's select monthly. That should give us a nice overview of the cash in and out of the business over the preceding year. So when we get to the next screen, we agree with 3 options, which are each account separately, which separates each account out, so you can see them one by one. We have the combined account, which brings everything together with an opening balance and closing balance. And then finally, we have combined with no opening balance, which is the same, but without the opening balance. So it starts at 0, as if you just newly started up your business. We're going to select the combined account to give us a view of the flow of cash in and out of our business. Now, if we select OK on that one, we get some options all surrounding the date. We're just going to leave this one as due date. Now, the final input screen is regarding bank accounts. So I've just got one bank account on my system, so I'm going to select that one. We're going from period 1 to 12 of this year, and I'm happy with the currency as GBP. And I hit OK. So as we can see from this report, we have currently got pretty poor cash flow. So we're looking at it, we've got a lot of outgoings, one set of ingoings, and we end with a negative 361,000 in our closing balance. Now, this may be for a couple of reasons. One, it could just be accurate and our cash out simply dwarfs our cash in. However, it may be that we haven't received money into our accounts yet. So we can open up a recent customer invoice. I'm just going to get one that I set up earlier. And I'm just going to minimize that. I'm going to go into my sales invoices form. Okay. And I'm just going to look for the invoice number. And now what I'm going to do is I am going to record a receipt for this item. Just tell me if I want to continue. I'm going to do a bank transfer. Going to load that up and it should finalize for me. So now I've receipted that money into our bank account. So that should now change to cash flow. So let's run the cash flow again with the exact same input steps. I'm just going to whiz through them. We'll hit OK. And we can see now that with that extra cash receipt in, we've now actually found ourselves in a positive state of liquidity over the course of the 12-month period. So we'll come back to this main cash flow statement a little later, but now I'd like to move on to the cash flow forecast. The cash flow forecast shows you when you should expect to receive money and the effect that will have upon the cash of your business at a given time. So there are 3 forecasting options. We have automatic, which is based on existing transactions and calculated expectations of when cash will enter and exit our bank. We've got the semi-automatic option, which is they're manually recorded into a form. Sorry, this is the manual option, which they're manually recorded and then populated as provisional entry. And you've also got the option of semi-automatic, where you pop the options into a form and then the system picks them up and adds them to your cash flow forecast. So firstly, we're going to look at the automated routine, the automatic routine. This procedure will look at the transactions in your system, for example, purchase orders, purchase requisitions, sales orders, and shipments, etc., and calculate based on your due dates, payment terms, and average payment times, the expected dates of transactions, and create a provisional entry for these. So if we go back into priority now, we can do this by using the Create Provisional Entries program, which you can get to by following financials, nominal ledger, financial statement, cash flow, and create provisional entries. So when we click, we get to an input screen. This allows you to select which stage of the cycle you want to include cash flow entries from. This can be as early as sales orders. And if you don't want any of these sections to be included, simply untick them. Earlier on, I unticked purchase requisitions because I didn't think it was relevant to my cash flow. So then I'm going to hit OK. You then get to a further page with options. So I'm going to ensure that each document separately and add VAT are ticked. For VAT, because I want to see how my cash flow is affected by paying VAT on items, I'm going to leave the bottom three unticked in this example, but feel free to use the help text and have a practice to find out which options are best for your business. And finally, select the date that you want these to be created from. I want to use the start of this year to match up with the cash flow statement that I used earlier. Yeah, okay. You should receive a message stating how many provisional entries have been created. In my case, that's 20. Now you can go and see the provisional entries within the entry journal by going to Financial, Nominal Ledger, Entry Journal, Entry Journal. And when you go to the entry number, you can move into query mode and search for capital A class. It's important to note that these provisional entries won't affect other reports or transactions in the system and won't affect your figures either. They're really handy to get an idea of what is going in and out of your business in the future. And we can start to see here a few of them and how they work, what's going into and out of where. Excuse me. Now, scrolling through these, if you have a lot of provisional entries, it might take up some time. So there's actually, in the financial statement cash flow, there's actually a provisional entry report. So you can use this to see what has been added during the previous program, and it will show you all of your provisional entries. So if I run that, what you'll notice is that this is broken down by transaction type. So it starts with purchase orders, then it goes receipts of goods, sales order, shipment, and it breaks them down by transaction. It's important to note that if you have an open sales order and the shipment, it will only take the one that's furthest along the chain. So it will take the shipment in that example. So it's not going to double up on your data and confuse your cash flow. So the next way to add to the cash flow forecast is to use the semi-manual system that we spoke about. And this is in a form called cash flow forecast sums, which sits 2 places above the provisional report entry. So let's open that. I've got a few set up already. We're interested in number 1. And you can see that the entry number begins with a little a rather than a capital A. Now, anything that shows up in this form, it's important to note, will not show up in your entry journal itself. It uses the form and it uses the layout, but it will never show up actually in your entry journal itself. So I've pre-prepared an example here. Firstly, you can add a date. I picked the beginning of last month, whether it's going to rerun on a monthly basis. Now, for this, I've said we're getting a loan in every 3 months, so you can set the interval of how many months and when that will finish as well. So mine finishes a year later, so 100,000 every 3 months for a year. So then you fill in the other details the same way as you would in the entry journal, such as the details, the account, and its effect on cash flow for what it's doing. And like I said, none of these will show up in the entry journal, and this form is solely for the cash flow forecast. It's important to note that for these entries to appear in the cash flow forecast, that you include the provisional entry flag. It's important you remember that because we will discuss that when we run the cash flow forecast shortly. Now, the final way to add to the cash flow forecast is manually in the future on the entry journal. So you can fill out your entry journal as normal. So we can go into the future, say the end of December. We've got the miscellaneous site. We're going to debit the electorate. credit cash and bank, and it's going to be a £5,000 payment. Now what we want to do here is put electricity the 21. When we go down to the bottom level, on the cash in bank, we find the cash flow section, cash flow code, and we want to set that as cash out, in our bank. We go back up to the top, and now rather than posting the entry journal as you normally would, because it's in the future, we want to convert this to a provisional entry. We'll hit OK, and it will say the journal entry has been created as a provisional entry, and you'll see that it's just added another A number to the list. And then when you're ready, once you've paid that bill off, you can use the action post journal entry to push it through to your account at a future date. So now we've got some provisional entries, we can have a look at our cash flow forecast. For this, we go to financials, nominal ledger, financial statement, cash flow forecast. And this time we have some different parameters to enter. We still have the time period, so let's keep these as monthly so that we get a breakdown per month. We're going to set display to all, but you do have a few other options in here, such as you can pick the bank only, the customer only, or the vendors only. So next we move on to the level of detail. So now we just want to see an overview to see when the money will come into and out of our bank. So we're not going to go to full details, so let's change that one to summary. I want to flag unreconciled entries because my system's not fully set up for reconciled transactions, but yours might be. So look into what the best options are for you. And I've got provisional entries flagged because of what we spoke about earlier to do with the form for cash flow forecast funds. So remember when I said make sure that the provisional entry is flagged. So that's why this is going to be flagged. So let's hit OK and see what our cash flow forecast looks like. So this is the highest summary of the cash flow. We can see, according to the time range I selected, the balance of my account over the time period and how it moves in and out of our forecast, according to the transactions in that account. This level of report may be useful to start reviewing the cash flow. But if you want to break that down to understand why there are particular anomalies, you can run the report in more details. So now, if I run the report again, but this time select Flowcode details, I'll then be able to see the data broken down by day and grouped by cash flow code, as you can see here. As we can see, the cash ebbs and flows into and out of the business, but based upon this, we should end the year in quite a healthy liquid financial position, as our forecasted incomings are higher than our outgoings. It is the positive push of incomings later in the year that allows us to have such a strong end to the year. However, this could mean that your business doesn't survive till then. Are there any outgoings you can push back or incomings you can bring forward to ease the burden? And that is what the forecast is all about. It allows you to see what happens when and account for shortfalls before they become an issue. You may want to then analyse this in even greater detail. So we can run the cash flow forecast again. And this time we're going to select detailed with Flowcode, full details with Flowcode. And these flow codes are the cash flow categories that we set up earlier on. So now we can see every transaction alongside its cash flow code and the effect on cash. This gives you the most info out of any of the cash flow forecasts, and the type that you choose to use will depend on what info you're trying to get out of the forecast and the type of business that you operate. Now, if you remember earlier, we had the cash flow groups. Now, where these show up is in the BI report. So if we open the executive reports, financials, executive dashboard, we're going to be interested in the bottom left graphic. Clearly it woke up on the wrong side of bed this morning. What we're going to do is we're going to select our payment type, and we're going to do it for the year. And we can see what makes up our, in terms of our cash flow groups, what makes up the payments that are going out. We can also select different time periods, such as every couple of months, or we can look at our receipts as well. So we've got bank charges, sale of NCAs in those 2 months. And if we go out to the year, you can see cash in, bank charges, and sale of NCA as the main receipts in our pie chart. There's plenty of different ways to utilise that and to change the views and so on. If you prefer a graph, you can see what's happening in each period as well. So that brings us to the end of today's webinar on cash flow forecasting. We hope you found it enjoyable and informative. If you require any more detailed training on setting up the cash flow, please contact your project manager or the support team. We'll be happy to arrange something. Okay, let's see if we have any questions. Okay, yeah, I can see one question here. Can we run these reports automatically? Yes, absolutely. So you can add them to the task scheduler and set the reports to be emailed out to the accounts team or perhaps the CFO of your business. You can do this every day, week, or even month, depending on the business need. We actually did a webinar on how to add to the task scheduler. So if anyone is unsure of how this can be done, you can go to our website, meditechuk.com, go to the news and previous events, or search for Meditech UK on YouTube, and you'll be able to rewatch the webinar. Let me see if we've got any more. So I've got a question here. How do we deal with multiple bank accounts in different currencies? You can select the bank account that you'd like to look at, and you can select what currency you're looking at as well. You can also use the star, the asterisk, to retrieve all, so that you can see the cash flow of all of your banks in one cash flow and one cash flow forecast. Okay, if there are no further questions, I'd like to thank you all for your time today. Thank you for listening and enjoy the rest of your day. Bye-bye.